Rob, it's great to have you, and thanks for joining us today.
Thanks for having me, Carl.
So consolidation, why cyber right now, especially since it feels like we're seeing fewer high-profile events, so to speak?
Yes, indeed. Fewer high-profile events, but in general, I think the urgency of cyber and having a cyber plan, and for companies from an IT spend perspective, actually, cyber is projected to be up, even with everything that's going on in the broader economy and within tech in general. Cyber still growth and spend is still continuing to trend up.
Right. Ideas, names. Who do you think would be in play more than others?
Yeah, I can't get into specific names. I can talk about trends though. So I think I think in general, folks are going to be looking for one solution and one throat to choke, so to speak, as cyber by its nature has a lot of micro-TAMs, a lot of small different areas, and consolidating that into one. So to the extent you have a large cyber player that has an expertise in one vertical, say whether that's firewall or endpoint, branching out and providing other solutions as well.
Robert, as we continue to look at a slower macro environment and companies look at pulling back spending plans, I don't think anyone thinks that they're going to pull back on cyber because it is such an important area. But do you think that there is risk of that if we do hit a recession, or what would put that at risk?
Yeah, great question. Right now, we don't see any suggestion that there's a pullback in cyber spend. I think we recently did some research and looked at guidance and where people are seeing macro impact. And in cyber, there's virtually none at this point. What I think could change that over time is if it winds up being a prolonged recession, or there's some exogenous event that we don't foresee right now that comes in, and that could change. But right now, cyber seems as solid a place as any.
Robert, taking a step back and just talking about software for a bit, it seems to me that we're in this moment where we're seeing things that typically happen in the private markets happening in the public markets. If you look at Unity IronSource, for example, putting those two companies together and putting some money in is something that private equity would do. If you look at the VCs who are moving to put money into public companies that they previously backed because maybe they're priced below the IPO price, Bill Gurley and Stitch Fix, for example. What does that signal for retail investors who might be scared of this market right now?
Yeah, I mean, I think if you look at it, the smart money, so to speak, the large institutional money is looking to deploy more and more into the public setting. I think the public valuations have corrected, and those valuations have not seasoned into the private markets. So what that's created is a situation where, exactly your point, where traditional private investors, people focused on the private markets, are pivoting and investing into the public markets because, frankly, the value there is better. So, as a retail investor, I think it's that's where the smartest money on the street is focused. I think that's a pretty good sign for them as well. I'm pretty bullish in general on where we are in the market, actually, as it relates to software.